It's great to have you join us for another edition of the only weekend business program on Channels Television, Capital Markets, the final edition for September and the third quarter of 2023. I'm Ladi Williams. First off, let's begin the show with a quick review of the domestic stock market performance at the end of the week. It was a brutal week for equity investors as Nigeria's stock market recorded losses in all 4 trading sessions. This week, the all-share index dipped by 1.4% week-on-week to 66,382 points, following profit-taking activities in Boa Cement and MTN Nigeria. On the activity chart, trading activity remained sluggish with 65.7% week-on-week decline in total trading volume and 40% drop in the trading value. Sectoral performance was mixed with gains in the insurance and consumer goods indices, while the banking and industrial goods and oil and gas indices declined. Beta Glass topped a list of 25 gainers, up by 30.41%. Oil led 46 other losers, down 33.76%. While the trio of Axis Holdings, UBA, and Transcore were the top 3 most actively traded stocks for the week. Well, the third quarter of 2023, that ends today, September, also comes to an end. Then tomorrow, the fourth quarter kicks off. And as we start October, we also celebrate Nigeria at 63. We also have unions in Nigeria bracing for strikes. Let's talk to Professor Uche Wale, Professor of Capital Markets, Nasarawa State University, KEFI, and President, Association of Capital Market Academics of Nigeria. Great to have you on the show, Professor.
Thanks so much, Ladi. My pleasure, as always.
All right. So before we dive into the market performance, Nigeria turns 63 tomorrow. How would you describe the evolution of Nigeria's capital market so far?
Well, let me start by wishing you and Nigerians a happy independence anniversary. Head or tail, whatever the situation is, we have cause to thank God. With respect to what we know today as the Nigerian capital market, yes, one could trace the origin to 1960, since independence, when the Lagos Stock Exchange was registered. Of course, we know it opened its doors the following year in 1961. But the real thing actually started in 1946 when the then colonial government, issued a development stock. I think it was for the purpose of constructing a railway. But a formal opening of the market, the doors were opened formally in 1961 with the coming on board of the Lagos Stock Exchange, the then Lagos Stock Exchange, with just 3 securities, at the time, and 6 FGN bonds. And today, at least we can talk about 155, companies that are quoted on the exchange, and nearly, up to 300 securities. At the time, as I said earlier on, we just had 3 equities, 6, FGN bonds. So I would say, yes, we've made remarkable progress since 1961. Some major timelines include, of course, we know in 1977, the Lagos Stock Exchange, got renamed as the Nigerian, Stock Exchange. By 1984, we had the index, all-share index, was developed. If you look at the trajectory, really, it's been one of the progress. In 1997, the Central Securities Clearing System was established. We also know that, over time, the menu of assets, has increased. So today, the product offerings have gone beyond the traditional bonds and equities. Today, we have exchange-traded funds. Today, even in the markets, we are talking about trading derivatives. And the market infrastructure, too, has been modernized. I recall in 2013, the NGX, then Nigerian Stock Exchange, introduced the XGen trading engine. And today, remote trading is going on, successfully. So market platforms, as I said earlier on, have increased in number. So
all right, Professor.
In addition to the NGX, Ladi, you know that we also have we have others. We have the NAS, we have the FMDQ, we have for commodities, we have the AFEX, we have the Lagos Commodities, Futures Exchange. Okay, so market infrastructure, has been improved and has been enhanced. But of course,
Professor,
I'm
a bit curious. Yes, I'm curious. What was the all-share index like, back then? Was it double digit? Because now we're about 66,000. What was it like, in the beginning?
Now, in 1984, of course, an index is nothing but something that measures, movement, between one period and the other. Of course, it usually starts with a base. So in 1984, January, February 1984, the index started at 100. So 100 was the base. So over time, of course, it has grown. Before the global financial crisis, 2008, it went up as high as 60,000, but then came down again. But only recently, it now touched its highest peak since 1984, crossing 68,000 points. But of course, since then again, it has declined to about 66,300 now. But what is remarkable is that it has made tremendous progress. Ladia was talking about the positives, but it's also important I mentioned that the market has also had some challenges. If you talk in terms of size, for example, if you look at the size of our economy, one thing is clear, that the size of our market does not really reflect the size of our economy. We're the biggest economy in Africa. We are in terms of even population, we are the highest in number. But our market represents less than 20% of the country's GDP, as opposed to that of South Africa, for example, where you have market cap, equities cap alone for the Johannesburg Securities Exchange is over 300% of GDP. The last time I checked was 22nd of September 2023. The equities market cap in South Africa was as high as 1.3 trillion US dollars, not rand. Okay, but back home, our cap today, if you check the equities cap, is around 36 trillion. If you put that in dollar terms, is the entire market cap, even when you add the bond for the NGX, is not more than $50 billion. Okay, so equities cap as a percentage of our GDP is less than 20%, and the number of listed companies, again, in South Africa, for example, close to 400. On our markets, just 155. Okay, so there have been issues. Again, even with respect to cost of transactions, with respect to time to market, and so on. So again, retail investors' base is also low relative to our population. But again, I must mention that on the side of regulation, we've had significant improvement since the establishment of SEC in 1980, and then in 1999 we had the Investment and Securities Act, which was later amended. Today, the current one is 2007 ISA, which is also being amended at the National Assembly. We've also had the Investment and Securities Tribunal, which was set up on the back of the ISA 2007. So in terms of regulation and confidence building, the Nigerian market has also showed some remarkable
all right, Professor.
And if you also check over the years, some of the measures that have been introduced, the red cash settlement system, the e-dividend system, although that is still one of the challenges that we have in the market today, issues of unclaimed dividends. So overall, I would say we've had significant improvements since independence.
But I guess there's still a lot of room for improvement. Talking about the percentage of market cap to GDP, just about 20%. What would you say is the way to actually improve, that? Talking about, market cap percentage to GDP, what should be done, what do you think should be done at this point? What should be the point of the plan, right now to get it to above maybe,
yes, okay.
100%?
Yes, I get your point. Yes. I get your point, Ladi. Oh, yes, I get your point, Ladi. I think only yesterday I was talking to, my constituency, that's the Chartered Institute of Stockbrokers. And one of the things I said to them in a meeting we had, again, to do with increasing the size of our market in relation to GDP, has to do with the role of the government, that the government should be the enabler, okay? So government policy should also be used to, grow the market, to develop the market. And when we talk about government policies, of course, we are talking about both fiscal and monetary policies. On the fiscal side, government can use fiscal policies, incentives to encourage listing. Because one of the challenges we have in the market today is that the issuer base is narrow, okay? If you take out MTN, you take out Airtel, you take out likes of Zenith, Dangote Cement, okay? 7 companies. If you take them out of the market crumbles because they are accounting for more than close to 70% of the size of the market. So you can see the over-concentration. And one way to, if you like, dilute that is to have more companies list in the market, large companies. So we are saying that government can use tax to incentivize listing, a discriminatory tax structure that, for example, says if companies' income tax for large companies is 30% as it is today, we can have it as 28% for listed companies. And that will encourage listing. And even we also understand, okay, that government will not lose revenue by so doing. On the contrary, government revenue, is also likely to increase because of the corporate governance that is associated with listed companies, because of the transparency and disclosure, associated with listed companies. Government stands to, get more taxes. So issues of tax evasion, for example, will reduce when you have a company being listed because it becomes transparent. So fiscal policies can be used to incentivize more companies to list. For me, when we talk about markets, it's not just about the secondary, what happens in the secondary markets. For me, when we say the capital market is a barometer for the economy, is encourages capital formation, it's even more in the primary market. And in our market today, the primary market is quiet. How do you activate the primary market? It's by encouraging IPOs. It's by bringing companies, to the market. Because when they issue shares, for example, okay, or issue securities, and they use the money to invest and expand their businesses, of course, you have inclusive growth because these companies will employ more people. So the capital market is there to assist us in our journey for inclusive, growth. There is no doubt about that. So right. I think the government has a lot of role to play. Another thing the government can do is to ensure that companies that it is selling or is privatizing, okay, the process is taken through the capital markets, okay? And that's why I'm happy that the government is talking about, listing the NMPC, limited, eventually getting it listed on the exchange. Okay, so if government is privatizing through the exchange, that is one way you can again ensure that Nigerians participate in the fortunes of those companies, and those companies also become more transparent and experience improved, corporate,
Right. Yeah, transparency very much important at this point. We'll continue the conversation after this break. I still have with me Professor Uche Wale, Professor of Capital Markets, National State. We'll continue the conversation right after this break. Just stay with us. Welcome back to watching Capital Market live on Channels Television. I've been discussing with Professor Uche Wale, Professor of Capital Markets, National State University, and yeah, he's the lead there for Capital Market Association of Nigeria, academics in that association. Thank you so much for staying on, Professor.
Thanks, Ladi.
And yeah, we've been talking about, Nigeria at 63, the capital market progress so far. And you did mention that we've seen, progress, when it comes to the growth of our capital market. But tomorrow, yeah, we're going to have the celebration, Independence Day. Then we also have, unions, labor, showing their displeasure at this time, with the government. Most of them are bracing for strike action, from the 3rd of October. And we've seen the federal government trying to persuade labor to shelve these strikes. But tell me, from your experience, how does the strike culture, how does that impact, capital markets and investor sentiment? Give me an overview of the impact.
Well, that's I think that's obvious. The impact is likely to, the impact is bound to be negative, not likely. It's bound to be negative on the market, on investors' sentiment, which we have seen in the last 1 week, has been down. One way you measure investor sentiments to even look at the market breadth. Market breadth on the average has been negative. So I think strike action will complicate it. I was actually thinking of the outlook of the market in the next quarter, and two things came to my mind. One is even the fiscal year that, in the U.S. that is going to start on October 1st. In the U.S., the fiscal year starts from October 1st to September. The fiscal year 2024 is going to start October 1 to September 23, and the issues in the U.S. at the moment, disagreements with the appropriation bill and the likely shutdown, government shutdown that may result. And if you will experience government shutdown in the U.S., the last time we had it was in 2019 for 34 days. And of course, the impact reverberated, on stock markets, across the globe. So if we had a U.S. government shutdown, prolonged, it's also going to affect, our market. So that's one consideration. The other consideration too, for me, has to do with this impending strike. I just pray and wish that the government will, respond swiftly and see how much it attends to the demands of labor, particularly the issue of minimum wage. Of course, all these agitations are coming on the back of the fuel subsidy removal. The adverse consequences it's having on the economy, together with the unification of exchange rates. Okay, so of course, government has I listened to the president's speech in July, where he made some promises, including the issue of buses, mass transit buses, minimum wage, and the rest of them. So I think what Labour wants to see is a serious commitment to implementing some of those measures, because some of them, in my view, may not happen overnight, like the issue of even the minimum wage. I don't think it's something that, given the fact that it cuts across states, subnational governments are also involved, so it may not really, resolution may not happen overnight, okay? But there is need for Labour to be convinced that, yes, action is being taken and these things will be resolved, within the shortest possible time. So, in a nutshell, strikes are not, in the interest of the economy generally. A lot of, imagine when banks are shut, a lot of businesses, get affected. Of course, we'll have the ripple effect of that, on the market. So investors will want to sit on the fence, and people will begin to take profits, as we're already beginning to see. Profit taking is what is dominating now, and we now see the market, tanking. So, in a nutshell, Ladi, I think it's something that right, the government should ensure that it doesn't happen. Even if it happens, it's not prolonged. It's not prolonged, right? But I also think that given my own reading of the situation, I think the government, will respond to it appropriately. Right. We do hope for a quick, swift response from the government. But yeah, the third quarter, ends today, and definitely the market has had quite a third quarter. It did grow by about 7% in this third quarter. We're looking forward now to the fourth quarter. What are you seeing coming? And just give me your review of the market in the third quarter. Well, the third quarter performance has been impacted, in my view, by the lag effect, what I call the lag effect of the reforms, the subsidy removal and the unification of exchange rate, which impliedly, meant devaluing the naira. So all of that have impacted the market. Of course, the rising inflation as well. Rising inflation is not in the interest of investments generally. The last inflation figure was came in at 25.8%. Even that's quite high. And food inflation, according to that figure, nearly 30%, 29.8%. So these numbers, of course, worry investors. They, if you like, they tend to dampen animal spirits. All right, and one way to also verify this lag effect is to look at the year-to-date return. Year-to-date return today in our equities markets is around 31%. Okay, that's the average for NGX All Share Index. We also know that some indexes, like the banking index, that it came in at printed as high as 66%. The oil and gas as high as 100% year-to-date return. They outperformed the average NGX index. So this lag effect I'm talking about can be spotted in the quarter-to-date performance. If you check quarter-to-date performance of the NGX All Share Index, is around I think 10%. So if year-to-date is 31, and quarter-to-date is 10, for example, it tells you that the quarter, helped to drag down the result for the entire 6 months or the entire 9 months. Okay, if you take the case of the banking sector that I referred to, or even the oil and gas that returned 100% year to date. If you look at again the quarter to date, okay, it gives you the impression. You understand that it also helped to drag, to diminish or to depress the entire year-to-date return. Okay, industrial sector, for example, was really hard hit. Year-to-date return for the industrial sector is below the average, so it underperformed at 14%. What do we have for quarter to date and even month to date? Month to date is even negative, minus 3%. So the last quarter has not performed well relative to the previous quarters, and the numbers show that. Okay, and I attribute that to the lag effect of the of the reforms that have been put in place.
Right.
Which, of course, I expected.
Yes, so Prof, definitely a lot to look out for in the fourth quarter and definitely into 2024. And we do have a confirmed central bank governor now. Just a few seconds, just tell me, what you expect and how you see investors, domestic and international investors, looking at how it's all played out, with our central bank. And now we have Mr. Cardoso now as the governor of the central bank. Tell me what you expect.
Yeah, the central. I've always argued that the central bank is a very sensitive institution, and it's not a place you have somebody in an acting capacity for too long. So it's a very good thing that the government has addressed that by appointing a substantive, CBN governor. One that is, in my view, represents a round peg in a round hole. He is, going by his pedigree, going by his background, very qualified to be there. The same thing can also be said of his team. So I think that that's also something that should bring about some level of confidence, in the markets and in the economy, and more so that he is also somebody that understands the capital markets. He himself a player in the capital market. So with him there and the finance minister, coordinating minister for the economy, both of whom understand the capital market, okay, as an integral part of the financial system. Remember, the central bank has responsibility under Section 2 of the CBN Act of 2007 to also maintain financial system stability.
All right.
So that financial system comprises both the money and capital market. So for somebody like Yemi Cardoso, who understands both the money and capital market, I think it is positive for financial markets, in general.
Okay, thank you so much, Professor Uche Wale, Professor of Capital Markets, Nasarawa State University, and President, Association of Capital Market Academics of Nigeria. It was great having your perspective today and sharing your weekend with us. Thank you so much.
Thank you, Ladi. Mike, thank you.
All right, so that's the show today. We'll catch you again same time next weekend. I'm Ladi Williams. Enjoy the rest of your weekend. Bye for now.